Now, the U.S. recession may almost be over. Indeed, it may have passed, in fact, but it's still a pretty ugly picture out there. Let's take a closer look at the Fed's Beige Book now. Michelle McCorry is in New York for that. Michelle, what was it telling us?
Well, firstly, Paul, the so-called Beige Book, just to clarify that, is a snapshot of economic conditions around the U.S. And today's Beige Book showed that 5 of the Fed's 12 regions reported that the downward trend is showing signs of moderating. Several regions said that their expectations of future business activity have improved, although they don't see a substantial increase through the end of the year. So basically, signs of continued weakness, but weakness is slowing down. Let's break down some of the data in the Beige Book. Manufacturing, well, it is low or declining in most districts. Several districts said outlook has improved somewhat. Looking at consumer spending, the key factor here, retail spending, that is still soft, with consumers buying necessities and avoiding luxury goods, and tight credit hurting many sales. Now, as far as home sales go, there is some uptick in several districts. Many said new home construction had stabilized, though at very low levels. Vacancy rates for commercial properties rising. Developers say it's tough to get financing for new projects and that credit conditions continue to be stringent. Now, the Beige Book also says that the labor market conditions are weak and that wages are flat or falling. So unemployment continuing to be the big problem here. Paul, all in all, mixed news. It's still bad, but at least it's not getting worse. And the words stable or stabilize actually appeared in some form or another more than 60 times in today's report. And the Fed survey is consistent with observations made by Fed Chairman Ben Bernanke and other central bank officials that the recession is loosening its stronghold in the economy. So, Paul, the key word, stable or stabilizing. Paul?